Good morning, good afternoon, good evening, and welcome to the slightly late running, my apologies, webinar here, the Bull versus Bear webinar with Steve Miley on the call for TradeDay.com. Today is Tuesday, the 22nd of February, so my apologies, slightly late running in here. Just had a little technical issue before I came online, but all set to go now. Remember, guys, any questions, please do pop them into the chat. You'll see the chat. If you're on live with us now, you'll see the chat below the video streaming. You can put in any questions there, anything you've got, any markets you might want to look at. If you want me to focus in on a market, I could do that, do some technicals on it, on whatever chart you might want. If you want to ask any questions about the macro fundamentals that are going on, please do pop them in the chat and I'll try to answer them. Put your name in there as well, that would help. So we're going to go do our usual regular run through in here today. Obviously a holiday yesterday in the US, so we were offline, but back online today. So today we're going to go through the calendar, not just for today, but for the week, to give us an idea of, remember, that the shape of the week. Okay, I think that's important.
Good morning, good afternoon, good evening.
Now I'm listening to myself on 1 second, guys. Just hearing myself there on the slight delay. So so we're going to take a look at the calendar, not just looking at the calendar for today, but the calendar going forward for the balance of the week, to give us an idea of that shape of the week. I think that's important, even though we've got very much at the moment we're being dominated by a large geopolitical event, which we'll talk about obviously today. But even though that is going to dominate markets, we still need to take into consideration the data. Up until the end of last week, even though we did have the geopolitical event, the Ukraine-Russia situation as a backdrop, the markets were really being driven by inflation data, by central bank activity, by central bank speakers, and it's only been the end of last week and obviously through into this week that we're now seeing the tensions between Russia, Ukraine, and the allies, the Western allies, as causing more volatility in markets and impacting more aggressively on markets. So we will take a look at the calendar. We'll go through that. Let's focus. I think I'll come back to the calendar. Let's just stay with what's really influencing markets right now. So obviously, Ukraine war fears shake stocks and send oil soaring. So we saw a significant sell-off yesterday. So yesterday evening, we did get a rebound actually, having had sold off the end of last week, Thursday through Friday. Global stock indices, we went to a risk-off theme. Global bond markets surging higher. Global stock indices selling off last week. The dollar slightly firmer. Gold breaking to the upside. But then that at the beginning of yesterday, with the US closed, we did get a positivity. We got some news from Macron originally saying that there was going to potentially be a summit between Russia and the US, and that lifted markets back higher early in the European session on Monday. However, as the day wore on, that was kind of seemed to be less likely. And then yesterday evening, Putin went onto the wires and basically, with the breakaway regions of Ukraine looking for backing from Russia, basically gave that backing, recognized those breakaway regions as sovereign states. And then various other comments from Putin. You see him there speaking, talking about Ukraine as not being independent, still being part of Russia. So you saw him there signing in, basically saying, signing in a decree offering support and recognizing those states in the eastern part of Ukraine and as separate legitimate states, and then offering support for those states. So that was obviously a massive negative for the markets. So we saw a big sell-off on futures markets globally, and the cash markets, the European markets were open. The US futures markets sold off with the Nasdaq down over 2%. The major indices, the SP and Dow Jones Industrial Average down around 2%. The Nasdaq down 2.5+%, and looking very, very, very negative into yesterday. But then something that I've been speaking about and I've been going on in the webinar, guys. I did this study long time ago. Okay, during Gulf War 1 or 2, I can't remember which one it was. Looking back. Various conflicts throughout history, and World War II. I looked back into World War One, looked at Vietnam, Gulf War One, Gulf War Two. And basically, what it showed that was when the build up to and this is a thing, saying that we have in markets, buy the rumor, sell the fact, or sell the rumor, buy the fact. So the market anticipates what's going to happen and moves beforehand. Then once we actually get the event actually occurs, then what sometimes happens is markets then, excuse me, to have a quick drink here, guys. Markets then reverse back to the other direction, and we've seen that in the last 24 hours. So the markets aggressively lower Thursday through Friday last week, and again yesterday on the build up to this event, or the build up of some kind of the tension that we've been building, a release of that tension with then actually something quite negative. Basically. Russia saying, yeah, we're going to support the separatists in Ukraine. However, if we look and see what's happened to the markets today, markets have seen a significant rebound. So if we look in here at the European equity indices, they're actually having a big sell-off yesterday in the European indices. We're down like over 2% yesterday in European equities. But you can see actually slightly up today some of these indices. Some of them slightly lower, some of them slightly back higher in here today on the European equity indices. And in here, stocks erase losses as Ukraine scenarios digested. Flight to havens ease as Treasury yields trade above 1.9%. So yields as well. So we'll come and take a look at the charts in a second. But bond markets obviously went higher in price, lower in yields, higher in price as safe havens. But we've seen now a retracement of that as well. So the safe havens, but bond markets coming back lower in price and yields going back higher. The 10-year yield going back above 1.9%. So so we're seeing markets, originally reacting in a risk-off, safe haven mode, a flight to quality, bond markets up, riskier assets, equities, stock indices selling off. Saw that Thursday, Friday, and then again yesterday. But Putin orders peacekeeping forces, so it's not seen as aggressive maybe as we had first thought. Maybe that it's not going to continue and go into a full-fledged invasion of the whole of Ukraine. Maybe they won't keep and push all the way on to Kiev. If that doesn't happen, then all that's really saying is then that this has been ongoing. Remember this. The separatist movement's been ongoing for years. So this is just basically Russia giving more force. Now that could obviously be a step to something a lot more aggressive. Okay. However, because at the moment there's been no real development since that, we're seeing markets kind of react to more of a risk-on theme this morning. So a sigh of relief almost. Yeah. So benchmark treasury yields parried their decline to trade at 1.92%. So parried their decline. So they actually went back higher in yield, lower in price. So the bid to bonds. Gold slipped. Gold pushed higher last week, surged higher last week, Thursday through Friday, and then popped a little bit higher. Remember, we had shortened trading sessions yesterday for the US President's Day holiday. So gold, oil, S&P 500, the equity indices were open for some time yesterday, and they reacted as a risk-off mode. So gold went higher. Oil rebounded strongly, having sold off last week. Strong rebound on oil into risk-off mode. And then we also saw bonds rally, okay, but we've had a retracement of all of those news. So we are getting sanctions coming through, and that's what's kind of hitting the wires. Forex Live covering that here. Johnson sanctioning 5 Russian banks, 3 individuals. In here, look, risk recovers. Sanctions on Russia, meager. First package of sanctions will be tabled at the EU meeting later today from von der Leyen. So we're getting various sanctions coming through, but no aggression coming back from the West, from the Allied forces. Okay, so the Allies in here not reacting. Merely sanctions, not particularly aggressive sanctions, and no follow-through on the Russian side. A significant follow-through, no more aggressive fighting, no more aggressive conflict. So it's almost like the markets, got ahead of themselves, painted a more negative picture, and then rebounding in here today. So as I say here, if you look at the headline there, stocks erase loss as Ukraine scenarios are digested. And again in here, Reuters coming, Ukraine war fears shake stocks and send oil soaring. That was from yesterday, though. Yeah, that was an update. Updated overnight. So we did see that. So European stocks did go lower in here this morning. But look, stocks rebound in mid-morning trading. Okay, Brent crude races to 70 years. So crude is still higher. The Russian ruble rebound. So the Russian ruble saw a significant sell-off yesterday, and then rebounded in here today. Okay, so all of this pointing to, and here live markets, full invasion of Ukraine, unlikely, but no, who knows? Okay, I'm not sure where that quote is from. Let's have a look at this in here. Can't see where the quote is from in here, guys. Okay, it's just a quote from it's an analyst. Okay, it's just an analyst, so I'm not going to read too much into that. It comes from an analyst, but nevertheless, in here, overall, it feels like markets got too negative too quickly, and there's a sigh of relief in here, and markets are rebounding. And let's go and take a look at some of the charts in here. Actually, let's go and take a look at what the more up-to-date 5 things to start your day. So Russia escalates oil soars. Bitcoin's no haven. So Bitcoin's selling off, again in here, and negative. Bitcoin just following stocks at the moment. Yeah, completely following stocks. I know we're not focused on Bitcoin at trade day, but nevertheless, it's interesting to see Bitcoin just not turning out to be this, it was supposed to be an inflation hedge. We didn't see that. It just moved with stocks as we got all the inflationary pressures, and as we got all the fears of interest rate hikes and more hawkish central banks through January into February. Bitcoin went lower with stocks. Yeah, now we've got this fear gauge. We've got the gold going higher as expected on fear on as a safe haven, but Bitcoin going the other way. Bitcoin going down with stocks. Okay, so energy prices surging. No real surprises there. The traditional safe haven outperforming Bitcoin in here. Markets are mixed in here this morning. So let me take a look at. Let's go take a look at some charts in here. And we'll just have a digester through all that. And then we'll finish out by going through the calendar. So here's the charts. So let's start off with the Nasdaq, the most damaged. Yeah, there's the Thursday, Friday sell-off in here. And then look, yesterday down lower again, significant sell-off, just about going down. And then overnight in here, following through overnight as Putin spoke, breaking down through the low. So that was a really bigger picture, significant sell-off, breaking down through the late January low in here overnight. But look at this candlestick, this really positive candlestick. If we can hold on to the gains, this will be a positive candlestick anyway. If the market can make any further gains to the upside on the cash market open, if we get a bid through the cash market open, that's a massive rejection, really massive rejection to the downside candlestick. Now, I'm not saying the market's going all the way up here, but you'd have to say you want to play this from the long side. If we go into the 1 hour chart in here, let's get rid of all these old retracements and the old trend line in here. So here's the sell-off in here. There's yesterday's sell-off, okay? But then look, we actually put a little double bottom in here, goes lower in here overnight, late last night. Late last night, as Putin spoke, went even lower, broke down through the previous low here, broke down through and you won't be able to see it here, but it broke down through that January low. So that January low was at 13,706. Okay, so that was here. So it held it initially, okay, and then down through it, and then broke down through it late last night, 13,706, took it out, okay, down to here. And then tried to rebound overnight, and then an impulsive rally. When we didn't get any kind of follow through on the downside, impulsive rally, not really aggressive sanctions, and then the market's now put in this firm base. The market hasn't resolved above any kind of significant resistance yet. Okay, that would be at least that swing high there. We could go and start taking a look at the trend line from the more recent sell-off, which we'd put through here. It's a long way off. It needs to get above this high. Then the high is all the way up here, right? But what you might consider in here, 2 things. The sell-off in here just from last week. So last week's step lower, down from the middle of last week, okay? The Fibonacci retracement on this, and then the fib on just the sell-off from yesterday. So just that sell-off now. We've got most of that back, right? So if we go and take a look at the fib on the just yesterday's sell-off, first of all, and you can see through the 50, through the 61.8. So that's quite aggressive. We're taking back basically 2/3 of the sell-off of yesterday. Already got 2/3 of it back. So that's kind of aggressive rejection. Okay, let's take a look at the bigger equation and the sell-off in here to see where the Fibonacci from last week's sell-off through to Monday's move lower. So we go and take a look at that. How much of this have we neutralized? Well, look, we're already through just of last week's sell-off in here, 23.6, 38.2% retracement. Oh no, not quite to 38.2. I think that's going to be critical. If we can get above the 38.2% of the whole sell-off, and remember this sell-off in here partly was due to data, okay, last week, but partly was also due to fears around, certainly Friday sell-off was to do with fears in going into the long US weekend regarding the tensions, the Russia-Ukraine tensions. So if we can get above the 38.2, we can get back through the first significant Fibonacci retracement. Obviously, we're already through the 23.6, but we can get through the 38.2. That would be a big statement. And that's coming in around 1400, actually. Yeah, 1400. So if we can get back above 1400 in here, it's going to be, 14,000. We're on the Nasdaq. 14,000. We can get back above 14,000. That'd be a significantly bullish statement in here, and then could easily open up to the peaks up here. So those peaks around 14,150, maybe even up to the 61.8. I mean, up through yesterday's peak would be a massive bullish statement. Can you imagine in here, if we get above yesterday's peak, you've got a bullish engulfing, bullish outside pattern, bullish engulfing pattern back above yesterday's peak, 14,157.5. Yeah, yesterday's peak. If we can get back above there, that'd be a massively bullish statement. So, but for now, I think looking at that 38.2 around 14,000. Let's go and take a look at similar price action on the S&P. Now, importantly for the S&P, we did not undercut the spike low from the 24th of January. We did undercut these supplementary lows in here yesterday after hours, okay, late last night. We broke down through there and then really impulsive rebound. Already in here, you got a bullish engulfing candlestick. Bullish engulfing meaning the body here, the body of today's candlestick engulfs the body from yesterday. Okay, it's different to a bullish outside. Bullish outside pattern is when the whole of the range is outside the previous day. So that would take a move above the peak up here. But this is already a bullish engulfing. We don't quite have that, I think, on the Nasdaq. No, so we haven't quite got it there because we're not above yesterday's. We'd have to go above yesterday's open. Yeah, and yesterday's open was 13,952.75. So through 13,952.75, a close above there will be a bullish engulfing candlestick also for the Nasdaq. Okay, so that's going to be an important level as well on a closing basis. But we've already got a bullish engulfing. So all the threat really is back up to yesterday's high here for the S&P. That's up at 43.91.25. And again, stepping in, zooming in. I'm going to step out. We've got this currently on the 30. I'm going to go to the 1 hour. Okay, get rid of all of this old stuff, all of these old retracements. Get rid of this old box. Remember we had this old support resistance box. And these old trend lines. And what we're going to do now in here is we'll go and put on, well, first of all, the trend line from the last week down. Now, this is going to be significant. So look much closer with the S&P 500 compared to with the on just that trend line there. I'm not sure if that's the same trend lines I've drawn. Let me see. Off the 17th of February. Yeah, no, it is the same trend line for the Nasdaq from the 17th of February peak, right? Oh no, we took it from the bigger peak up here. Yeah, no, we took it from the 9th of February peak up here. So the equivalent trend line here would be this one down through here, which again we're kind of quite close. Different trend lines. Let's take this. Take a look at this one here. So the Nasdaq playing with that trend line. Look, coming down. That's from the 17th through yesterday's peak. Yeah, so it's flirting with it. So reversing that more accelerated trend line, and the S&P 500 doing similar. Playing with it at the moment. Look. Gone right up to it. So just above this trend line would be a bullish signal. So just above yet today's high. Today's high 43.50.5. If we can get above 43.50.5, it reverses that trend line that comes down from the 17th. That will be an important bullish statement. Okay, and then easily opening up risk back up to the high, which we mentioned yesterday, 43.91.25. Up through there will be massively bullish because it will make a massive bullish statement on the chart. That would be the obvious target for me. Okay. And then you can put your Fibonacci retracements on as well on those guys. Right, I'm going to switch and take a look at the commodities because obviously they're active as well. Let's go take a look at, first of all, the gold chart on the daily. So you can see in here gold having surged higher last week on the risk off theme, nudging higher over the last two sessions in here. Okay, nudging actually surged higher on Thursday, nudged higher on Friday, nudged higher again in the shortened session yesterday, then notably higher this morning. But look, failing again here. Okay, we're going back into risk on. So look again, an engulfing bearish engulfing candlestick, engulfing yesterday's small body. You could argue these are indecisive doji kind of candlesticks. Okay, the last two sessions, and then the market making a new high and then failing. We'd already popped above. Remember this peak in here? That was from November. Okay, but failing below this peak over here, which is back from, where are we here? Let me hide this, get rid of this. This is back from May last year. Okay, so fading back from below that May peak. I think it's from just below. Interesting to see. Yeah, from just below this May peak. Okay, and then fading, and then a real negative candlestick. And if we step in and look at it now on the 30-minute chart, because of the sideways hesitation, look in here, sideways hesitation, kind of risk off mode again, right? Risk off mode is trying to rebound at the moment, yeah, but maybe looking to sell into this rebound. If it takes out, you got this like kind of like a neckline. I mean, it's not a head and shoulder. You could argue it's like a head and shoulders top, but look, oh, it holds beautifully at that neckline. Look, so you got this neckline. It's kind of a head and shoulders, shoulder here, head, shoulder, but then you made a new high, okay? But then look, the market goes right down to this line. So this line, whatever it is, a neckline or whether it's part of a triangle, a channel, whatever you want to call it, that's going to be important. A breakdown through the current low, okay, would be a real negative in here. Looking for it to be capped off by, see that little rebound high there? That rebound high, 1903.9. Looking for that 1903.9 to cap, looking for the market to roll lower, and then maybe looking for to sell the break as it rolls back down low. Don't have to wait to the break of the low here. You could just zoom in and sell. If we zoom into like a 5-minute chart, as the market rebounds, if it starts to roll lower, you have the little up line here. So this is now on the 5-minute chart. And maybe looking to sell on the break of this little uptrend, this little rebound trend, yeah, for a bigger sell-off, yeah. And then you'd focus then, if it breaks down through this line, you'd be short, and then looking, on the bigger, back out to that bigger chart in here, this kind of pseudo neckline, yeah. Okay, let's take a look at oil now. The March contract, is not, you can see in here, actually, you can already see the data's not great. That's because it's not front month anymore. So we're going to scrap these and we're going to go and put in the CLJ. I believe it's April is front months now. So in there, I'll get rid of these. So you should be, if you're trading oil, you should be trading the April contract. J is the code. Going to get rid of these, so we don't mess around with those anymore. And I'll add in the daily chart. Okay, so here's the daily chart. So in here, having indicated, now my reports from yesterday, I was indicating, and from Friday, looking for a topping pattern. A topping pattern had gone in here. Okay, we were looking back then on the March contract. I've yet to actually roll. I need to roll my reports onto but the market put in really a topping pattern in here. Looks more negative in here. If I go zoom back out to that 1 hour chart. So in here, it's starting to look really more negative in here. Big impulsive sell-offs, 1, 2, 3 in here. But, strong rally, new multi-year high. Now we are setting back again. Okay, setting back again in here. And that's because we're going back into like a risk on mode. And remember, this rally has been because of risk off, concerns about supply, right? Concerns about supply, concerns about energy, increasing energy costs because of the conflict. So the market now retracing, having spiked higher in here overnight, and again this morning, now starting to retrace. I think it's a tough one. I don't really want to play with this one, to be quite honest. I think gold's cleaner. The fact is, we've just made a new high, right? So, and it continues to make new highs, in this uptrend. We do get the odd couple of down days though, and we've just made a new high. We basically effectively gapped to a new high. Okay, the market then has failed back lower in here, closed the opening gap in here. So I think there's real risk, to the downside for oil, and if you believe the risk on theme, then you can play from the short side. I probably wouldn't want to be playing though till I get a signal, and I think the signal comes from the trend line, which is still kind of some way away. That trend line is not going to break until that low breaks, and that low there I think is going to be important, 92.22. So it's still some way away. 92.22 is the level. I think or you guys see the little impulsive move in here, so the market coiled in here, It was then so it's 5 a.m. London time for whatever reason that was. The market got this impulsive move back higher again, maybe through the low there. That low there is 92.66. So 92.66 the low there, or the actual swing low over here is 92.22. So maybe one of those two, waiting for a break below there before entering short exposure would be my suggestion there. Right, guys, let's get switch back to the calendar, and I'll do a run through on the calendar to what we really need to watch out for. Now, the easy way to do this actually for me is going to be, I'm going to go to FX Explain. And we publish it. Actually, I can go to. Oh no, I'm not going to be able to go to it because I'm going to be listening to myself. But we publish this now, so also I've got this published on FX Explained in here. But we're also putting it out. So if you go to where the market reports are, I'm publishing this report as well on trade day, just for you guys. Okay, so it's the same recap and outlook. So it's a recap of what happened last week, the developments, and what we're watching. What happened in the market, and then watching out for what happened in here, what we've got coming up data-wise, and what to watch for the coming week. Obviously, we're watching Ukraine, Russia is the main thing in here. But if we look through today in here, we've already had German IFO, and we're waiting for the US market data in here. So yesterday we had market data, MARKIT, PMI data. We get the US data in here today, the flash PMI from market. Okay, so that's definitely going to be worth watching this afternoon. So we're watching out for that market data this afternoon. But then going back to what we've got on the bigger picture. So tomorrow is actually going to be in the US time. It's going to be overnight tonight. We get the RBNZ interest rate decision. Really probably not going to impact markets we're looking at too much at all in here, unless you're trading the New Zealand dollar. We've got US GDP and PCE data, certainly important. PCE data, personal consumption expenditure data. Oh, sorry, we also get consumer confidence from the US this afternoon as well. So just going back in here, consumer confidence, where's that? There it is there. Okay, so consumer confidence, that's 10 a.m. Eastern, and 15 minutes before that, 9:45 Eastern, we get the market PMI, flash PMI. So this is a precursor to the final data. We get a heads up on the February data. So we're getting that 9:45 Eastern, and we get consumer confidence data at 10 o'clock Eastern. Okay, going back to here, we've got the PCE data, personal consumption expenditure data. It's important. The Fed often referred to it as the more important. It's the gauge of inflation that the Fed watches. Okay, the PCE prices paid data. Okay, so watching out for that. Okay, that's going to be important. And then alongside to get GDP very much a lagging number, so not so important in here. And then we get durable goods, US durable goods on Friday. So most of the data in here, well, actually spread through the week really. PMI and consumer confidence today, PCE Thursday, and US durable goods on Friday. Nothing too much to worry about on Wednesday. Clearly the geopolitical focus, Ukraine, Russia, any kind of developments either on the diplomatic front or any kind of heightened conflict, any kind of heightened tensions on that side is going to be really watched by markets. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do stay safe out there. I'll be back with you another bull versus bear watch tomorrow on Wednesday. Take care.